David McDonald, the CEO of SolarAfrica, joins us for the first episode of 2026. And we're going to be talking about the difference between on-site solar, electricity wheeling, and energy trading. Why this? Why now, you ask? Well, commercial and industrial businesses are really facing a power crisis on two fronts. They need to save costs and they need to go green. And it's no secret how badly electricity prices have soared. I don't have to remind you on your personal bills and your business bills what the price of electricity is at the moment, and it will erratically continue to do so. And many businesses, for instance, component manufacturers in the auto industry, are really facing serious pressure to green their operations with renewable energy. So, as was with the case years ago when solar became a thing, there are now a flood of suppliers entering the market, promising on-site solar, electricity wheeling, or energy trading as an all-quick fix option to really get cheaper power. That's what it's about. And it's quite overwhelming for businesses today to understand what to do, and to say the least, it's a costly mistake if you invest in the wrong option. So today, we are going to be unpacking what these solutions look like, how they work, and how they can work together to get your business running cheaper, greener power that is reliable and sustainable. David McDonald, CEO of SolarAfrica. Happy New Year. How are you doing, David?
Great. Thanks yourself. Thanks, Aki.
That's great, man. Well, listen, let's start with the basics. What's the difference between solar and wheeling and trading?
Okay, I think let's start with solar in the traditional sense. As most of the listeners will know, solar in the traditional sense is a physical system on your site. So those solar panels that you see on everybody's roof, that generates electricity for your own consumption. That leads to great savings. You're offsetting, obviously, the expensive power that you're currently buying from either Eskom or your municipality. And everybody knows that those tariffs are only headed in one direction. So that's traditional solar. If we talk wheeling, which was obviously the buzzword for 2025, it is where large IPPs, right, they build solar farms, wherever it may be in remote areas, large masses of land. That energy gets fed into the grid, okay, and then it's credited to your account. So extremely competitive pricing, it's built at scale, and there's no physical installation on your site. And now where we see the trends heading is towards trading. Trading is a form of wheeling, but essentially it's where a licensed power company or trading company buys power from multiple of those IPPs, aggregates that, and it could be across multiple sources of energy. So solar, wind, hydro, etc., aggregates that and then sells that into the market on much more flexible terms.
Okay. All right. Well, thank you for that. I kind of knew what each of them was, but you've made it a lot easier to understand. So thanks for that. Now, when does it actually, now this is the big question, David. When does it actually make sense to look beyond on-site solar? So in other words, I've got solar in my business, and it's working okay. If the power goes out, it's okay. It's saving me a bit of money. But when does it make sense for me to say, okay, listen, I need more energy. I need it at a more cost-effective price. I don't have any more space on my roof or around in the land. So how and when do I look beyond that?
So I think, you touched on there, right? I think traditional solar is going to save you the most money, right? So I think that's the first place to start. If you could take a long-term outlook on your business, so, beyond 10, 15 years, you've got the space, you've got the ability to put it onto either your facility, onto the grounds, maybe even through carports, then solar is the way to go. Let's say you've now got that and it's operating and you want to look beyond that. You can start to look at energy wheeling, right? But essentially that would be a bilateral agreement between yourself and an IPP. Now, if you're a large consumer of energy and willing to get into long-term agreements with an IPP, then wheeling is for you, okay? They're going to be looking at minimum of 10-year offtakes. They're going to be possibly looking at guarantees that have to be put in place, really depending on the quantum of energy you want. And those contracts are fairly rigid. And the reason I say that is The IPPs got to go to the bank. They leverage a lot of money, and we're talking in the billions of investments that go into these plants, right? So they need to know that their offtake is secured for many years to come, right? However, if your business can't take that outlook, right, and you're looking for possibly a more flexible solution, something where you would just like to top up, or you have high seasonality in your business, then trading is probably more the solution you're looking for, right? Shorter term tenors, flexible solutions, and a lot of innovation is happening in that space. We're even looking at Eskom trying to counteract the SAWE market by putting in virtual trading, which essentially is like a cashback system for IPPs. Technically speaking, not available for traders at this moment in time, but that's the kind of innovation we're seeing, where we're seeing the market move away from longer term contracts to flexible terms. But for that, you're going to have to give up on pricing. So if we recap that, traditional solar, reduce your reliance on the grid, save as much money as you can. It's in your control. And there's multiple options to do that through owning that equipment yourself or via a PPA through a supplier. If you can take a longer term outlook on your business and you need more top up, wheeling's for you. If you can't, head to the trading section, because you can definitely see some innovative products coming out.
Yeah. I'd like to take a deeper dive into the costs, because at the end of the day, that's what it's all about. And what I'm hearing from you is, wheeling, your costs are really quite fixed. And the last option you offered us is, more flexible, but I guess that's going to cost a lot more. So how do the cost structures differ between the three models that you've been talking about?
Okay, I think if we start with solar, and if we had to compare apples with apples, so let's talk about a PPA, right? So let's assume you as a user have entered into a PPA with a rooftop solar provider. Each of these solutions have their own cost profile, but essentially it's built off the back of the equipment installation, right? I think, there's going to be providers in the market that have got more price tension just based on the economics of their scales. But essentially, if you're looking at an on-site PPA, you want to look at the T's and C's, right? So pricing the market's got a bit of price tension, so it all comes down to the fine print. If we look at our on-site solar solution within a PPA, things you've got to be looking for is, are there performance guarantees in place, right? Does my provider offer me free maintenance and insurance, right? They own and operate that system for the life of the contract, so they should be bearing the majority of those risks. So in other words, make sure that there's no hidden costs in those T's and C's. On the wheeling front, again, you can go to market and there's some pricing. I think what we're seeing in the market is people are pricing on today's pricing, giving you escalations between now and when the power actually comes online, which is difficult in this market because we have seen a lot of these projects be delayed through, regulatory processes, Eskom pushing back, grid instability, policy changes. So you've signed up today, hoping you're going to get your power in 27, 28, and there's escalations, and that gets delayed to 29, you're paying more, right? So you get price in today's pricing, and then people will give you a price at commercial operation date, and they'll lock that in today. So those are the two real differences in wheeling. And then possibly a third one there would be your use of system charges, which is essentially your Eskom line rental, if you want to call it that, if you want to simplify it. And that's gonna differ from customer to customer and region to region. But the nuance there is whether or not that is for your account or whether that is for the IPP's account. And then if we talk trading, the price is really just made up through the contract length, your mix of resources, okay, and essentially your flexibility on terms. So, in the market, we see wind being a lot more expensive than solar. However, with wind, you get higher penetration, right? So on a rand basis, you're probably looking at parity there. But essentially, a 1-year deal is going to cost you a lot more than a 5-year deal. So it's generally driven by mix of resources and the tenure of your contract.
Okay. So, if I'm a business and let's say I've got an existing, installation on my roof, where I'm going with this is, can combining the technologies, the three that you've been talking about, the solar plus storage and the wheeling with the VPPA, can that all improve reliability? Is it possible that you can combine all three, for example?
Definitely. I think that's where, I mean, that's particularly where SolarAfrica wants to take the market. But essentially, if you're talking technology-wise, then yes. So if you're starting, let's assume you've got a solar rooftop system, possibly the next play there would be, and this is again nuance per customer, but would be for on-site storage, right? So increase your resilience from the grid, or your reliance from the grid. And essentially, there's multiple revenue streams for energy storage these days through demand management, through time of use arbitrage, and essentially shaping your profile to match that of a wheeling or a trading profile, right? If you're able to match a wheeling or a trading profile better, then you get higher penetration, obviously leading to better savings. And that's the kind of customers that IPPs or traders are looking for, you know. It's essentially making their life easier because you're matching your consumption with their generation, right? So marrying those technologies works. And then it comes down to your load profile and the mix of energy. You know, if you're a 24/7 user, however you consume more energy during the day, then you're probably looking at a base product with wind and a day product with solar. You could be buying solar from a IPP in a wheeling deal, and then trading in your wind, you know, specifically if you're a little bit more seasonal. So these things do work, and the policies do allow for it. That being said, though, it's probably easier if you are able to find one supplier who can swap you in and out of these products, because, as I mentioned, these products sometimes are very rigid, and if you're buying from 3 different suppliers, you know, they're not going to be as flexible as if you were buying from one supplier to swap out per product.
Okay. All right. That makes sense. So somebody that you can talk to direct, basically, like a SolarAfrica, that can say, okay, do this, do that, and we can make it all happen for you from one place, which actually adds a lot more flexibility and less confusion to everything. But, you know, when you start comparing these proposals, they could be quite confusing. I mean, just listening to there, as a business owner, I thought, okay, listen, I'm a bit confused. What if you could say to a business right now that's watching this, what should businesses be looking out for?
So I think, I mean, again, it really talks to what type of business we're looking at. But essentially, you want to be partnering with somebody who, for the long term, can offer you multiple solutions, right? So businesses or a supplier who is innovating in the market, somebody who is looking forward, somebody who understands where the wholesale electricity market's going, has an ability to bring in multiple resources. So from a supplier's perspective, I think you're looking for flexibility, right? In South Africa, I think we've had a big boom. We've got a lot of traditional IPPs in the market. I mean, that's born out of the REAP market. And as of late, you know, I think we're north of, I think, 12 or 14 trading licenses that have been issued. So there is a lot of price tension coming into the market. And again, that creates confusion. Traditionally, your larger corporates would follow the route of going via a consulting engineer. We're doing a lot of education with consulting engineers to understand how we marry these technologies, you know, and the market is forming on the back of lenders' requirements, you know. So and it's not standardized as yet. I think in 2026, we're going to see a lot of standardization come from the banks. Early days, they weren't really prepared to take a lot of risk. As these plants are coming online, and a lot more going to come online in 2026, you know, and we'll be able to swap out suppliers, customers when perhaps they're defaulting. So there's a lot of change in the market. But essentially, if we go back to the question and saying, you know, what would I tell a business today? I'd say find a partner who's aligned themselves with your green energy journey, somebody who understands your requirements, because your business requirements are going to change, right? So look for flexibility in those contracting structures and multiple product bases. Don't tie yourself to one product on a really extended long-term deal, unless you can take that view on your business.
Okay. So let's come back to SolarAfrica. How does SolarAfrica, how do you guys make it easier for my business to navigate these different choices? Because every single business is different, as you know. Every single business has different energy demands. They might have peak demands. They might not need as much energy at some time of the year. So every business is different. If I come to Solar Africa, how do you guys help me navigate around all of these choices?
So I think if we look at our journey to date, Solar Africa started out as a rooftop solar provider, which I believe to be the most technically constrained product, right? So in other words, the most difficult to meet customer needs, just due to volatility in customers' businesses, right? Specifically on a PPA basis, we take a lot of risk. We could end up with stranded assets. So we spend a lot of time understanding our customer needs, doing specific research as to load profiles, seasonality, tariff structure changes, load management. So we've learned a lot about businesses and how they consume energy in South Africa, being a rooftop solar provider, right? We have now moved into the space of IPP, energy wheeling and trading, which are far more flexible products and don't take as much risk, due to the fact that they're virtual products, right? So we put that energy onto the grid, and essentially if a customer defaults, there are abilities for us to put that power elsewhere, okay? And in saying that, I think the differentiator that we bring to the market is understanding the customer's needs and marrying possible solutions that are out there to their needs over a period of time, right? So we understand that a solution today is not going to necessarily be the solution that you need in 5 years' time. And the technology that we have today is not going to necessarily be what we're going to be implementing in 5 years' time as well. So it's all around innovation, it's around product flexibility, and it's about our ability to show you where the value lies in terms of lifetime customer savings. So a lower tariff today doesn't necessarily mean lifetime savings for your business due to possibly rigid contract or agreement terms, right? And structuring that around what their customers' needs are, and the policies that are driven from, or the credit policies that are driven from the banks.
Fantastic. David, where does one get in touch with Solar Africa? How does one reach out to you guys?
You can contact us via our website, which is www.solarafrica.com. Or if you want to reach out, you can call us directly on our landline, and then via social media as well, both our LinkedIn and our Facebook pages where we're active there.
Great. Listen, can I throw a curveball at you? And I don't know, maybe it's a dumb question, but when you look at the way technology is evolving and, the abundance of energy, etc., are we ever going to get to a point where the cost of electricity, particularly here in South Africa, is going to start dropping? Because we're doing things so much more efficiently, and we've got better creation of energy. I don't know, but I don't know. Is that a possibility? Am I smoking something good in 2026? Is there a possibility that the cost of electricity can actually drop in, say, a decade from now?
I think if we look at global trends, I don't think we see it going to drop, but we're definitely going to see it plateau. We are run based majority of coal, right, which you've touched on. Is our current base is extremely inefficient. Our grid is constrained, so we need a lot of investment into the grid. You've seen over the past, I'd say 3 to 4 years, a lot of private investment come into the energy space, and the P programs with government and the likes of Eskom and the private sector is working, right? It is offering value through to the end consumer, which is going to bring price tension. The fact that we're moving towards a liberalized market with things like energy traders, Eskom being unbundled, that's going to remove a lot of the inefficiency, right? And it's going to bring a lot of price tension. In the short term, I don't think we're going to see the electricity prices from Eskom necessarily drop, right? And hence why I think majority of our consumers are partnering with the private space, or the IPP providers. But in the long term, we are going to move away from these large 10, 12, 13% increases that we've seen. I think it's also to be fairly aware that South Africa came off a really low base in terms of our cost of electricity 15, 20 years ago, right? However, that trend should have stopped, let's say, I don't know, possibly 5 years ago, and it hasn't. And I think that's through the inefficiencies of our system and regulatory change, which has now happened. And obviously now we see a lot of investment coming in. So I've got a positive outlook on where this energy space goes. But we're definitely not going to see a reduction in cost. To be able to maintain this infrastructure takes capital investment, and for that, people want their return. So I see it plateauing, but definitely not head the other direction.
Brilliant. Well, listen, it's a positive note. So there's light at the end of the tunnel, and it sounds like there's a lot of light. So that's good news. David McDonald, CEO of SolarAfrica, thanks for joining us once again and sharing those insights. Absolutely fascinating. Have a great 2026.
Thanks, Aki. Thanks for the opportunity. You too.